Well, good day, everyone. Ivy Rose is here, kicking off the trading season with all of you. Look at how much she's grown since I brought her on. I got her back at just at the end. If you think about it, I got her beginning of June. And she's, 4 months old? What a cutie pie and smart. All right, I wish I could teach her charting. I'm Ira Epstein, and we are on Tuesday, the day after Labor Day, September 6th, 2022. So here we've reopened in the marketplace. We're sitting here and looking at the markets trying to stabilize in the stock indices. Got to pay attention to your Bollinger Bands. They're very important as the market's approaching a number of them. Dollar was super strong as the euro cracking now the 98 level. Now the British pound got a little bit of a reprieve today on hope and prayer that Miss Truss, the new Prime Minister, Liz Truss, can develop and deliver something to help the economy. I have my doubts, not that she's not capable. I don't know too much about her. So I'm certainly not criticizing anyone I don't know too much about. However, what can she do that others haven't done? Are you going to cut taxes on everything, throw more money at the economy when inflation's out of control? Where are you going to get these funds from? She has her hands full. It's that simple. We in the U.S. have seen Jackson Hole come and go now. We saw a market decline after the Fed chair. We are seeing still very good economic data. If you looked at the ISM service sector today, thumbs up. I mean, powerful for the month of August. Real strong. But then we're going to get into the CPI number. Now, the question is, how fast can the CPI break? That is really the question we in America are facing. Our CPI is different than Europe and other places where energy's run away. In the U.S., we, knock on wood, don't have the same problem. They are at the mercy of Russia and much of the European Union, and they are paying the price for that. At the same time, at home in America, the speed that the CPI falls is going to start dictating how aggressive the Fed does and doesn't get. We have this week the Bank of Canada coming out with their interest rate hikes. We have the Reserve Bank of Australia. You've got a lot of them coming, and the word is they're going to be aggressive on these cuts, although Canada's saying that maybe this is the last one they have to get that aggressive on because CPI there is also falling. These are what we have to watch. When we fall in the CPI, traders seem to take that as a bullish sign in the stock market. Hey, that means the Fed's going to be able to do things a little different. Folks, the Fed's going to keep raising interest rates until it gets ahead of whatever the inflation is. It's too soon at this point when you just had the Fed chair tell you what he's going to do to start trying to pick, when we get here, we'll do that. I saw Bill Ackman today try to do that, and he's quite bright on CNBC this morning saying he thinks by the end of 2023 that inflation could be down to 3.5% to 4% and Fed funds will be at that level. Okay, so he's still talking raising quarter points, half points, whatever it takes to get there. But what none of us know, including the brightness of Mr. Ackman, is does inflation get sticky and at what point is that? Is it 4%? Is it 5%? Is it closer to 6%? Nobody knows just yet. It's a real unknown. And if you're going to have a neutral interest rate, it's got to be higher than wherever it sticks. That is the problem we have. All right. So when we look at the S&P, we've spent a bit of time now on a weekly chart under the 18-week average. The big problem for the market is right here, that June period. This is what the market's going to be looking at. Everybody that you watch on television is questioning, can the market hold 3,900 in the S&P, or does it give ground to go and retest back here? The 3,900 level is because the market was right here in a zone. You can see it on the chart where the market fell back. That's the top of a support zone that the market made. That is how they're coming up in large part to that particular number. I don't think anybody's going to argue that for the short term, you have a pattern of lower highs, lower lows. What's the definition? A downtrend. What will break it? Getting back over 40.19 on this pattern would break the pattern of lower highs, lower lows. Where's the resistance in the market if it rallies? One of the resistance points is now the 100-day average because you've stayed under it this long. Therefore, if you've stayed under it this long, on the way up, it'll be between that and the 18-day average of 4113, let's call it and a half. Where's the support? The market keeps running the lower Bollinger Band, moves to the right, and then breaks down on it. Notice how the market tries to stay over that band. Go back with me on these charts. This is why Bollinger Bands are so important. The average guy on the street comes in, he's selling, this market's going down, and he gets caught in these bumps in the market, and he goes, well, I'm wrong. I can't handle that pressure, and then it comes back down. Because he doesn't understand what happens when you have an embedded slow stochastic. Embedded means the red and the blue lines are going sideways under 20 for several days or more, and they lock in the if you will, momentum. Until that momentum's broken, the trend down, bias down helps, but that's dictating that on rallies, the pros are selling short, with objective still being the lower band. Now, at some point, the market won't hit that band. You want to also have on your chart window envelopes. Window envelopes come in, and they're deviations from the 18-day average. I use mine, and I created mine very different than using a standard number deviation. I use my swing line points in large part to determine how they move on the chart, and I have found that it serves me well. I give those as part of my subscription service daily. I'm updating them, and the clients get them. In the NASDAQ, my eye goes right here, embedded reading. It tells me each rally is going to get sold in the market until the red line closes over 21. So I'm expecting that. And again, between the green line, the 100-day average, and 12,840, the same thing. What about this chart going back into this June time frame down here? Chart action is not the same on the S&P. This does not have that support level that we saw on that chart. You start getting closer to that when you get over to the Dow that made its low, but here too. I think it's the S&P stands on its own. This chart is just very bearish. I, for one, am in the camp that the market's going to try to challenge the June lows. I'm in that until I have reason not to be. What would bring me out of that? Possibly the Fed not going with the 75 basis point hike at the September FOMC meeting. If the CPI comes in soft enough to cushion them, maybe we don't have to go back down here, and maybe the market's going to spend a little time playing around. But remember, you're in the weakest month of the year for the S&P, which is September. It typically is a decline of about 0.6%. Lower highs, lower lows, embedded, still bearish here. Russell, embedded reading. Now the resistance should be the 100-day average. Clear it. Maybe you can get to the 18. But you have to lose the embedded reading to tell me that there's a reason to be long or not short. I want to say it the right way. Not to be short anymore. I don't see any way to get long off this pattern. We then get to the VIX. Let this load. It just takes a small second here. And on the VIX, the market, the capitulation would happen if the chart got up into the 40 level, something up in this area here. You can see the 40 on the chart there. That might be the capitulation. I think what keeps the bear very much alive is this chart doesn't capitulate. It's in a very orderly break to the downside ever since Jackson Hole. The market topped out in stock indices in most cases against a 200-day moving average, if you looked at it. We then get to the September T-bonds, and I'll probably move now to the Ds. We might as well move on them. I'll just finish this up with it. You're down to the lower Bollinger Band today, another cover area for part of a position. You don't want to give it all up. You have an embedded reading here. You have an embedded reading right here in the 10-year notes as well. In the SEP dollar index, in currencies, you want to trade in the SEPs. But in the bonds and notes, we're going to make a move to December's. Look for your resistance at the upper Bollinger Band. You got within today 24 points of that. You're getting very close to where a correction. You're there. You can get a correction at any point, but a correction to lose the trend has to see the red line close under 79. You're at 88. You're not there. So, I talked to you about all this, and you keep seeing me mention one thing. What are we seeing out of the Bollinger Bands? And again, in this market, can we get to the lower band to get more profit taking? Trend is certainly down. That would be 98.26 and a half. Quite a break if you got there. In the British pound, you have an embedded reading. So what do you think I think of this rally? I think it's nothing. I think it's just a pause, and the market's going to continue down until the red line closes over 21. Will I be telling clients to sell this rally? Well, if you get my full research, you'd know. Okay, it's coming out tonight. In Bitcoin, still in the bear camp. Look at how you've got that embedded reading. Look at how the prices are going. Bollinger Band at 17,700, a potential target. Differential between November, Brent and WTI, just sort of drifting, but the bias favors the Brent because you're over the 18-day moving average of closes. When we got up here a week ago, I told you I thought the pros week and a half would come out of their longs. Not embedded, hit the Bollinger Band starting here. I don't care if it went a little beyond it. It's all about getting the meat out of it. Still in trouble. Over the weekend, we saw OPEC cut oil production by 100,000 barrels a day. They will go further. I don't think we're going to see a deal between Iran and the United States. It just appears it's political suicide for Biden if he does this. I can only imagine what the Republicans will do in front of the midterms and then the big election. How dare he went back to them. I mean, I could hear it. So I think that's a dead issue. I've been saying in my newsletter, I think it's a terrible game plan if he did it, and I continue to believe that. Unfortunately, the Iranian government cannot be trusted. It's that simple. Their mission is to destroy, okay? We are the evil. In any case, can we get back to the 90 level? I don't know. You're already oversold. That's a hard number when you're already oversold. In WTI, can you get to 83.85? You're oversold. I don't see anything that I like on this chart, just here to predict the price one way or the other. Gasoline, did we get that Labor Day rally? No. Was I here telling you each day you're not going to get it? I was. And now you're still under pressure. Think of how many days in a row since July 4th, that holiday period, gasoline prices just turned around and fell. Last, natural gas. The combination of a Bollinger Band and the 100-day average when you're oversold, to me, that's reason enough to lift all shorts, walk away from a market. I'll let you do what you want, but for me, that'd be enough in a downtrend to say, hey, I don't want to play anymore. So you hear me showing you the Bollinger Band. You're seeing the importance of everything. Ivy likes it, so maybe you'll like it. Take a look at right here, this ad on the Bollinger Bands, and learn. You've got time to do it. It's only 13 chapters. Teaches you all about Bollinger Bands and momentum with them. Take care. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.